Welcome back to the Longacres Finance channel. It's Dividend Snowball time, and today we will be taking a look at the Dividend Snowball for Abbott Labs, ticker symbol ABT. Abbott Labs is a developer and manufacturer of healthcare products. The company operates in 4 segments: established pharmaceutical products, diagnostic products, nutritional products, and medical devices. The company has a market cap of about $217 billion, making it one of the largest healthcare stocks on the market. In 2021, they posted total revenues of $43 billion with $7 billion in net income. They are also a great dividend stock, achieving both the status of a dividend aristocrat and a dividend king. Today, I will be taking a closer look at this wonderful dividend history, and what I want to show you is how well investing in Abbott Labs would have worked out. I think some of you may be pleasantly surprised by the results, and the small twist this stock offered long-term shareholders. Okay, on to the Dividend Snowball. I have price and dividend history going back all the way to 1985, which gives me roughly a little more than a 37-year investing period. The price of Abbott Labs in January of 1985 was roughly $1.32, adjusting for the 6 stock splits between 1985 and today. The average annual price return for Abbott Labs over this period of time was 12.82%, and the average dividend growth rate was 11.35%. These are very good long-term growth rates. The company did have some rough periods, as most companies do, but all in all, long-term shareholders must be pleased with their results. For my Dividend Snowball, I will assume an investor contributed $100 to the stock each month since January of 1985. This would mean making 447 $100 contributions for a total investment of $44,700 over the span of 37 years. Without dividend reinvestment, the market value of this strategy would be worth about $583,000 today. And during this 37-year period, your shares of Abbott Labs would have paid you about $92,000 in dividend payments. Combined, this would mean a little more than a 15 multiple on your total investment. Not bad from a very simple long-term investing strategy. Now, had you instead opted to turn on the Dividend Snowball and reinvest all dividend payments along the way, you would have an additional 4,439.99 shares of stock today, worth an additional $533,000. That's nearly 48% more value compared to not reinvesting dividends. Sounds pretty sweet if you ask me. And the Dividend Snowball would also turn you into a millionaire, as the combined market value of the purchased shares and the reinvested shares is about $1.12 million. Now we move up from a 15 multiple to a 25 multiple just by incorporating a drip plan into our long-term strategy. Reinvesting dividends also results in receiving more dividends. Over the course of this 37-year investing journey, reinvesting dividends generated about $57,000 in additional dividend revenue, or about 38% more dividend income. The most recent dividend payment paid by Abbott Labs was in February of this year. The purchased shares in this Dividend Snowball example would have generated a dividend payment of $2,284.11, which is equivalent of more than 22 months of your contributions. With dividend reinvestment, long-term shareholders would receive an additional $2,069.51 in dividends, giving them more than 43 months of contributions back in the form of passive income. But this isn't the whole Dividend Snowball story for Abbott Labs. If you recall, in 2013, Abbott Labs spun off its pharmaceutical wing into a new separate company called AbbVie. On January 1st, 2013, shareholders of Abbott Labs were issued 1 share of AbbVie for each share of Abbott Labs they owned. In my 37-year example, our position in Abbott Labs was 4,659.41 shares in December of 2012, and an additional 2,993.18 shares with dividend reinvestment. Today, the 4,659.41 shares of AbbVie are worth about $791,000. And the resulting market value from dripping all of AbbVie's dividends is worth about $1.08 million. And thus, if we held onto the issued shares of AbbVie and reinvested all of the dividend payments since 2013, we would have roughly $1.87 million more today. So the true value of investing $100 into Abbott Labs with dividend reinvestment would be worth just shy of $3 million, and that's an almost 67 multiple of your total investment. The additional shares of AbbVie would have generated $6,569.77 in dividend income paid in February of 2022, and $8,843.53 more dividend income had we reinvested all of the prior AbbVie dividend payments. Combined, that would be a dividend payment of $19,766.92 in February of this year, which is nearly half of our total investment over the past 37 years, returned in the form of one passive dividend payment. Investing in one company for 37 years takes a lot of patience and dedication, but if you're lucky enough to pick the right company to invest in, the results can be tremendous. Something else you can take away from this example is the power of reinvesting your dividends. It starts out very slow, and you almost don't see the impact reinvested dividends make. But over a long period of time, like 37 years in this example, reinvested dividends almost double the value of our position. I believe both Abbott Labs and AbbVie are fine companies today, but whether they can achieve the same results over the next 4 decades is tough to say. AbbVie is having an excellent run this year. The stock locked in 3 months of positive returns thus far, and is up nearly 21% through the end of March. Abbott isn't having as rosy a year. It locked in 3 months of negative returns thus far, and is down 15.6% through month-end March. Some investors try to time the market and look for bargain opportunities. But sometimes the best and the easiest route to take is to find high-quality companies and consistently buy shares of its stock regardless of what the market is doing. I have ran this dividend snowball analysis on a few dividend-paying stocks now, and the results of consistently investing into these companies are phenomenal. I'm sure if I looked hard enough, I could figure out a formula to invest more capital when shares of these companies are trading for more attractive prices. But there is no guarantee this formula would work out in the future. And the results of consistently buying and holding shares works out so well that I don't even think taking the risk of trying to time the market is even worth it. But that's just my opinion. This dividend snowball video came as a suggestion from one of the comments on my recent post. I know there were several other companies requested, and most of them have been added into the video pipeline. If you enjoyed this video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.